Hi, everybody. This is Alan Ellman, the Blue Collar Investor, welcoming you to this BCI podcast, number 88, titled Creating a Portfolio of Weekly Cash Secured Puts. We're going to be using a real-life example with Square Inc., which trades on the New York Stock Exchange under the ticker symbol SQ. Now, let's start off by defining what is selling cash secured puts. Now, this is a low-risk option selling strategy where we sell put options, agreeing to buy shares of an underlying security at the strike price by the expiration date. We, the put sellers, determine those two parameters. Now, we are then paid a cash premium for undertaking this contract obligation. Now, our brokers will require us to secure that put sale with cash. The formula that's used is the put strike price, which is generally out of the money or lower than current market value, minus the put premium that we receive times 100, that's per contract, and then times the number of contracts that we're selling. So that will determine the amount of cash that we must put into our broker cash account in order to secure that put sale. Now, why should we sell cash secured puts? Well, most of us sell cash secured puts to generate a weekly or monthly cash flow. In today's podcast, we're going to focus in on weekly puts. It can be done for either one. Now, selling cash secured puts can also be used for buying a stock at a discount. Because if we're selling out of the money cash secured puts, we're then buying them at a lower price if it's exercised, the strike price, minus the premium. That would establish our new cost basis and the discount that we would generate if we bought the stock via selling a cash secured put. Now, we can also use selling cash secured puts in conjunction with covered call writing in a strategy that we refer to in the BCI community as the PCP, or put call put strategy. This is sometimes referred to as the wheel strategy outside of our BCI community. So what are our goals? Well, we first want to select only elite performing underlying securities. And we screen these through fundamental, technical, and common sense parameters. So they are only elite performing securities that we would otherwise not mind owning in our portfolio. We also must identify and establish an initial time value return goal range based on our personal risk tolerance, because the higher the returns we're looking for, the greater the risk. So we must align our initial time value return goal range with what our personal risk tolerance is. There's no right or wrong. It will vary from investor to investor. In my case, for monthly options, I like to generate an initial time value return goal range between 2 to 4% a month, which means between 0.5% and 1% per week. And that is what we're going to use in this strategy for this podcast, 0.5% to 1% a week. Now, let's get back to our real life example with Square Inc. And we're going to look at a weekly option chain with Square trading at $80.28 on February 10th, 2020. Now, again, we're going to look for a 1 week expiration. And since Square is trading at 80.28, we're going to look only at out of the money puts or strikes lower than 80.28. And that would be the 78 strike, which generated a bid price of 42 cents. The 78.50 strike, which generated a bid price of 53 cents. The 79 strike, which generated a bid price of 67 cents. And the 79.50 strike, which generated a bid price of 89 cents. So those are the out of the money strikes that we're going to evaluate using the BCI put calculator. Now, we feed this information into the white cells of the calculator. For those of you also watching this podcast, you could see in the screenshot that the information shows square trading at 80.28. And we have the various strikes ranging from a high of 79.50 to a low of 78, all out of the money or lower than current market value. And we could see the premiums ranging from a high of 89 cents for the 79.50 strike to a low of 42 cents for the 78 strike. Now, for those of you watching, the red arrow shows the initial time value return or the unexercised return. And that runs from 1.13%. Remember, this is a 1-week return for the 79.50 strike down to 0.54% for the 78 strike. All of them meet our requirement from between 0.5% to 1% for the 1-week return. Now, if we take a look at the amount of discount we receive, if the option is exercised and the shares are put to us at the strike price, we could see that that discount ranges from 2.08%. Okay, that's a discount from the current market value of 80.28 to the actual cost basis of 78.61 for the 79.50 strike, and that's a discount of 2.08%, up to a discount of 3.36% for the 78 strike, where we buy the stock at a cost basis of 77.58. So you could see that when we sell these out of the money cash secured puts, either we're going to generate significant weekly returns, or we're going to purchase the stock at a discounted price. Now, this doesn't discuss exit strategies because we can always buy back the put option if we don't want those shares put to us. But for the purposes of determining our initial structuring of the trade, it shows you how beneficial selling these cash secured puts can be. Let's summarize. As with all forms of option selling, selling weekly cash secured puts requires us mastering the 3 required skills. They are stock selection. We talked about the screening process using fundamental, technical, and common sense screens. Option selection, which strike and expiration date. For put selling in the BCI community, we only use out of the money puts. In this particular podcast, we favored weekly options. You could use these with monthlies as well. And then position management or exit strategies, which was beyond the scope of this podcast. Now, for the BCI methodology, once again, we favor out of the money puts lower than current market value and must establish what our initial time value return goal range is. In the case of this podcast, it was between 0.5% and 1% per week. Once the trades are entered, we then go right into position management mode, and all that information is detailed in my books and online video courses, blog articles, etc. So, ladies and gentlemen, before I go, let me remind you to take advantage of all the free resources on the bluecollarinvestor.com website. Just go to www.thebluecollarinvestor.com. You could see the free resources link at the top. I take our beginner's corner tutorials. They're free for covered call writing and selling cash secured puts. And visit our store where we have spreadsheets, calculators, online video courses, books in PDF, softcover, some in hardcover format. We also have trade planners, online mentoring programs, and much more at the bluecollarinvestor.com store. So, ladies and gentlemen, that concludes this BCI podcast number 88, titled Creating a Portfolio of Weekly Cash Secured Put. Folks, I hope you not only enjoyed this presentation, but my hope is that you will also benefit from it financially. As always, this is Ellman, the Blue Collar Investor. Take care, everybody.